Hello all of you. Today discussing Advanced Financial Management. Subject name is AFM. Advanced Financial Management. So unit number second. Capital structures and firm value. Capital structure and firm value. Last lecture discussing component of capital structures. Topic name is component of capital structure. Component of capital structure. Component of capital structure. So last lecture discussing component. First one is and today's lecture discussing component of capital structures. First one is earning per share means EPM. First EPM earning per share in short EPM. So the earning per shares means earning per shares refers to the profit available for equity shares issued by the company after the payment of all third party due including tax and dividend on preference shares. Earning per shares means refer to the profit available. जो profit available आहे कंपनीकडे त्या प्रॉफिटला काय करतात रेफर्स करतात आणि पर शेअर्स इक्विटी शेअर्स इश्यू बाय द कंपनी आफ्टर द पेमेंट. त्यावेळेस कंपनी पेमेंट इश्यू करते ऑफ ऑल थर्ड पार्टी ड्यू इन्क्लुडिंग टॅक्स अँड डिव्हिडंड ऑन प्रेफरन्स शेअर्स. तर त्यावेळेस कंपनी कुणाला पेमेंट ड्यू करते तर थर्ड पार्टी मीन्स प्रेफरन्स शेअर्स होल्डर. दॅट इज अर्निंग पर शेअर्स. Thus earning per share is dividend by dividend the number of equity shares to the profit available for equity shareholder. That is EPS. EPS means earning per share. That is the EPS. EPS means earning per share is equal to earning per share is equal to profit for equity shareholder. Profit for equity shareholder profit for equity shareholder means PES. Profit for equity shareholder divided by number of equity shares. Divided by number of equity shares. EPS is earning per share. That is the formula for the profit for equity shareholder. Equity shareholder जो profit असतो तो profit for equity shareholder divided by number of equity shares. That divided by number of equity shares is equal to earning per share. In short, EPS. Okay. So the next one, return on equity. Return on equity means ROE. Next one is ROE. ROE means return on equity. ROE means return on equity. So the earning per share means profit for equity shareholder divided by number of equity shares is equal to EPS. And second one is component of capital structure. Second component is ROE. ROE means return on equity. So the return on equity is the other form of earning per shares. Return on equity is defined as the rate of return on equity share. Therefore, so the ROE is formula. Return on equity is formula. ROE formula is equal to profit for equity shareholder. Profit for equity shareholder. Profit for equity shareholder divided by profit for equity shareholder divided by paid up equity capital share divided by paid up equity capital share capital. Paid up equity capital. Paid up equity capital. Paid up equity capital share capital. This is a component. Second, and next one is, so the next component, cost of capital. Third one is cost of capital. Third one, cost of capital. So the cost of capital means the cost of equity share include the discount offered to equity shareholder and flotation cost incurred at the time of issue of equity share capital. That is the cost of capital. Cost of capital means the cost of equity share include a discount offer. Cost of capital share means include the discount offer to equity shareholder and flotation cost incurred at the time of issue of equity share capital. The cost of equity can be defined as the minimum rate of return that a company must earn on the equity finance portions of an investment project so that the market price of the share remaining unchanged. This is the cost of equity shares. And next, fifth one is cost of capital. So this is the cost of equity shares. Cost of capital means as the main source of capital are equity shares, preference shares. Cost of capital means as the main source of capital are equity shares, preference shares, return earning and debt. The cost of capital consists of the cost of equity shares capital, cost of preference shares capital, cost of return earning and cost of debt. The cost of capital is the rate of return the company which the company has to pay to various supplier of funds to the company. The cost of capital has two aspects, namely overall cost of capital and weighted average cost of capital. The combined cost of each component of capital without giving any weight to particular source of fund is called as overall cost of capital, means KO. Cost of capital means KO, and if the combined cost is calculated by assigning the weighted, the to respective cost of different source of fund. It is called as weighted average cost of capital is equal to WACC. And discuss the last lecture. WACC means weighted average cost of capital and KO means cost of capital. This is the cost of capital and cost of equity shares. The cost of equity shares include the discount offered to equity shareholder and the flotation cost incurred at the time of issue of equity share capital. Cost of preference shares. So the cost of preference shares preference shares. Preference shares involve fixed rate of dividend. Preference shares, this is the main point of involve a fixed rate of dividend, flotation cost, discount on issue and premium payable on redemptions if any as it cost. Cost of preference shares, this is a preference shares involve fixed rate of dividend and flotation cost, discount on issue and premium payable on redemption if any as it cost. And cost of retained earning. So the cost of retained earning at the profit not distributed as dividend to equity shareholder accumulate over the year in the company. The retained earnings are available for further profitable investment opportunities. If it is not utilized to earn some profit in the business, the potential earning is lost by the firm. Hence, cost of retained earning is the opportunity cost of capital. This is the component 6 and component 7. This is the last one component, cost of debt. This is the last one component, cost of debt. Cost of debt. A company may raise the debt by borrowing from financial institutions or public at fixed contractual rate of interest. It is acknowledged as debt in the form of debentures or bond or deposit at some fixed coupon rate of interest. Show the some rate of interest, debentures, bond, deposit at some fixed coupon rate of interest. In cost of debt, it also involves flotation cost, discount at the time of issue and premium payable at the time of redemptions. The factors affecting the cost of capital may be different for each source of fund and therefore the cost of capital also different from source of fund to source of fund. Generally, the cost of retained earning is the last followed by debt, preference shares and equity shares. That is the cost of debt. And next point is the relationship between components of capital structure. So today's lecture is this over. Thank you for everyone. Thank you for all of you.